As a whole, we believe that cryptocurrency failure is inevitable. Despite the cleverness of the system and the significance of the blockchain, Bitcoin offers absolutely nothing special. There is zero output from it. You just look at it for hours and out pop little bitcoins or whatever it is. In essence, it is a fantasy. We would never short cryptocurrency, but we would gladly buy long-term puts such as a 5-year put if we could. But if you are interested to know if Bitcoin is a good investment, Warren Buffett already says no. And if you'd like to know why, then keep watching because this is The Financial Bridge, where we will be talking about Warren Buffett's thoughts on Bitcoin. But before we go on, please make sure to give this video a like and subscribe, and click the bell button as well if you are interested in staying updated for more of our content. Now, let's not waste a minute further and let's begin. People are more likely to get involved if they believe they will profit the following day. This is especially true if they believe that a friend or acquaintance would profit while they will not. When asked about Bitcoin, you essentially acknowledge that Charlie's analogy of Bitcoin to rat poison is spot on. When pressed more about it, you respond by saying that it's probably more like laser ray poison squared, and Charlie would then proceed to call Bitcoin turds in the meeting. Expressive guy as Warren Buffett describes him, so maybe he'll grow up a bit in the future. Now, we simply wanted to discuss something that caused quite a lot of controversy, especially on Twitter and other places where you could find people trading cryptocurrencies to be really vocal about their displeasure. What is it about Bitcoin that causes such enthusiasm among young people? You can gauge whether or not purchasing a farm was a good investment based on the yield and market price each year. When we make an investment in a company, you focus on the asset itself and how much money it makes for you. What the company makes at the conclusion of the period is what we use to form an opinion about how much we overpaid for the company. In this case, not only we do have the original investment, but we also have the byproduct of the asset's labors. Investors in non-productive assets have no guarantee of profit beyond the possibility that the next buyer will be willing to pay a higher price. However, the object generates no new value on its own. Gold is just one such fascinating example. The compound rate is probably a tenth or 2/10 of 1%. And then you have to insure during that time and make sure you know nobody steals from you. This is calculated by looking at the number of hours of whatever you had to give in order to buy an ounce of gold in time of Christ and bringing that forward to the present. Yet, it doesn't add to your productive resources. You can overpay for a source of income. But if we acquired a farm in the 80s and have been blown away by its annual yields ever since, soybeans and corn, at the end of the time frame, we still own the farm and have made a sizable profit from its operation. Apartment building, running business. But if you and another person buy different cryptocurrencies, they won't do anything but sit here like a bunch of rabbits in a cage. And they'll just have to sit here and hope that next time you get more excited after they buy it from you. And then maybe they'll get more excited and buy it from you. Then we could sit in the house by ourselves and keep driving up the price bet. But at the end of the day, there is only one Bitcoin left, and we need to find another buyer before they disappear forever. If anything, that's the greater fool theory. Now, you may be wondering about what is exactly the point we're making out of all of this. Basically, what we're saying is that something with the intention of selling it on to another person is called speculating. And it's great since it leads to a growing price. More people will buy and more people will say that they have to get in on this, but it's usually better if they don't understand why. There's also this aspect of non-product. You'll be more fascinated if you don't grasp it than you do. What we mean is that you can get 4% annually if you invest in bonus schemes. There won't be any pleasant surprises. She'll charge you 4% a year. However, if you can have anything your imagination can conjure up, you may perform this illusion with anything, from shark's teeth to seashells, by simply looking at it and proclaiming it to be magical. It happened once before with tulips in 17th century Amsterdam. It will happen again. You might have gotten gold in 1942 by saying that we might lose the war. We might have to flee off to some other nation. So let's put our assets in gold. People who think like this often speculate and gamble. especially if they think they have a half-plausible reason to do so. If you invested all your money in the stock market, you would have less than a penny for every $1 you made. Someone actually calls that a safe haven? They've got to be kidding themselves. Now, Charlie Munger has a question in mind for Warren Buffett, which is, he was wondering what his thoughts are about the announcement made by Goldman Sachs that they would be establishing what amounts to a trading operation centered on Bitcoin and other cryptocurrencies. They undoubtedly think lots of people are going to get excited about them. And maybe you already are, but there's money to be made trading them. Meanwhile, Warren Buffett answered it by saying that they are not offering a valuation judgment. He finds it hard to believe that Goldman Sachs' top partners are liquidating their Goldman shares to buy Bitcoin. However, he centered his entire argument by questioning Charlie Munger on the matter since he believed he meant this is in reference to the turds. He compared trading this to wanting a piece of the action while others were trading turds. Warren Buffett believes that Charlie Munger has been having a hard time waking up. Actually, over time, people have traded on some pretty wild speculations. Just picture people in Amsterdam selling their homes to buy tulips. The more he thinks about it, the sillier it would be if he were to whisper something on this program. Since there are no strict limits on the quantity, the more of it there is, the stronger the reaction. An investor might respond that he'll buy the 15 times earnings, but not 20 times of anything, before committing to stock purchase. But when you are involved in something that doesn't yield any results, there are no controls. In the absence of any comparable data, the assumption must be that the current upward trend will be maintained. Those who are familiar with Warren Buffett are simply waving the red flag of the bull. Of course, we despise the success of Bitcoin, and we do not welcome a currency that is so useful, along with the kidnappers, extortionists, and so on that come with it. Nor do we enjoy handling over a few extra billions, billions, and billions of dollars to someone who has created a new financial product out of thin air. Warren Buffett's humble opinion about it is that this entire process is repulsive and counterproductive to human progress, but we will let others do the criticizing. Now you may be wondering what are the factors to support this assumption, and Warren Buffett simply answers it by saying that it's a bubble. Yup, a bubble. If you acquired gold during the time of crisis and calculated a compound rate, it might be a couple of tenths of 1%, because there are only so many that can be mined. It won't provide any value or other than illusion of scarcity. But even that were the case, the question would still remain as to whether or not it was capable of self-production. Imagine a world where people couldn't send each other checks or use electronic methods of transferring money. While this would certainly make life more difficult, it wouldn't make checks particularly valuable. Now, we know you'd like to hear more about this subject, but we regret to tell you that this video has come to an end. But don't worry. Stay tuned to the second part by checking our YouTube channel right away. We thank you so much for watching, and if you are liking this video so far, please make sure to give us a thumbs up before you leave. And if you'd like to stay updated for more of our content, then simply click the subscribe and bell button as well. Once again, this is The Financial Bridge. Thanks for watching, and we'll see you on the continuation of this video.